Bank stocks also rallying today. The KBE up over 4%. Bank of America, Citi, Wells Fargo, JP Morgan, Goldman Sachs among the big winners. But two of our traders are fading the action in Citi and JP Morgan. Tim and Karen both selling calls here. Karen, which stock? Why?
JP Morgan. Why? Just an enormous run. I mean, earlier in the year was up at about 280, and that was at a time we thought, all right, deregulation, great. M&A is going to be huge. M&A is not going to be huge, it seems. So sort of take that off the table. It's had a very big run, and I don't think it's a particularly tariff. Tariff leveraged industry. So the bounce off this tariff, I guess, call it rapprochement, whatever, is, I think, overdone. So had to sell some. And there's the tiny bit, one day Jamie Dimon will retire. But I'm still long. I just sold against a portion.
Yeah, I mean, I call this being tactical in a high vol market for banks. I mean, Citibank went from 55 to 75. I just sold it out a couple months at the old highs. My view is that today was the day actually banks should have rallied. The yield curve steepened. There's some dynamics that you took away some of the stag, you took away some of the inflation, and so there you go. But Citibank, I don't think it's going to get away from you. It hasn't for the last decade, even though I'm actually still pretty bullish on Citibank. But the trader in me said I could sell vol out 2 months, and I can always roll these calls up and out if I want to.
You know, it's interesting what you just mentioned about M&A. It might come back. I mean, you saw that Google deal for Wiz. That was a $32 billion deal. If people get confidence that might pass, you might see some other strategic M&A. And the other thing is, if I had an S1 for an IPO, and I pulled it or kind of pulled it back, if you will, after this market volatility, I'd be dusting that thing off right now.